Good evening, everybody. Happy Sunday. It's March the 20th. I hope all of you are having a wonderful weekend. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview for the week. So, as usual, before we get started and we talk about next week, we would definitely, especially this week, need to take a look back because there's a lot of information, as per usual, that we've learned over the last week. Well, let's start first with the 4-day trading session that hit positive day after positive day after positive day. And again, another positive day right across the board for equity markets, especially in the US, but here in Canada as well. And let's take a look at part of the reason why. So as many of you already know, we did have the federal interest rate decision, and it was an increase of a 1/4 point. The aggressive attack by the Fed to bring down inflation by raising rates by a 1/4 point. So as many of you know, I always felt that the 1/4 point was necessary in order to help appease the market to some degree, give some degree of satisfaction to the market that the Fed is actually going to do something to lower inflation or to battle inflation or to do whatever when it comes to inflation. But the truth of the matter is, let's be honest here, the 1/4 point is going to do very little for inflation. In fact, even if we continue to raise it a 1/4 point every quarter, so over 2 years we're up 2%, it's really not going to do anything. The truth of the matter is, and the numbers speak for themselves, if you actually want to battle inflation aggressively, you need to at least increase the rates to the level of the inflation, if not exceed the inflation. So is a 1/4 point really going to do anything? Is another 1/4 point really going to do anything? No. In fact, Fed Chair Powell last week also stated that he's anticipating, at least for the short term, that inflation will actually increase rather than go down. Interesting. But he also said that although we've raised rates and we may raise rates again, we may actually decrease rates under special circumstances. And I can't really see another special circumstance better than war. And yes, I have talked about this in my daily morning reports, but it's important to just make note of it again. I've got a lot of notes here, so you've got to bear with me, and I do apologize. But in truth of the matter, if we're going to talk about inflation, it's not really going to do anything. The Fed fund rate is expected to only sit between a 1/4 point and on the high end 0.5%. Again, nothing is going to change at all in regards to inflation. And we can also expect that not only will inflation continue to go up, but we can also watch the money printing go up, which will help accelerate inflation to the upside. But let's keep going. So after the inflation conversation and after the interest rate bump, we saw that the markets continued to move up, which is not surprising. I did tell you guys about it, did give everybody the heads up for a very long time that the interest rate boost will actually cause the markets to go up because a lot of the market traders were anticipating this positive news from the Fed, and at least to show that there is going to be an attempt to curb this interest rate or curb this inflation with some kind of interest rate planning. But the truth of the matter is the markets went up. So regardless of what we think in regards to what the Fed is going to do, the markets reacted well, as I expected. But this week is going to be a little bit different, I think. Although we're going to have a lot of positive momentum out there, it would be absolutely normal to see a little bit of a pullback here, at least early this week, Monday, maybe Tuesday, or at least we're not going to see the positive drive that we saw finishing the week last week. Now, could it continue to go up? Absolutely, and I think it's eventually going to go back up. In fact, I think after this boost here with the 25 basis points to curb inflation, I think what we're going to see is new all-time highs in the near future, assuming we're not going to get another crisis or an increase in tensions over in Europe. Now, that being said, where we have to look this week is not just in general equities, because we absolutely need to consider what's going on in the commodities market. It is absolutely crucial as we continue to move forward that we start taking a look at the charts and very seriously consider the fact that inflation, although is up about 8% reportedly in the US, is actually significantly higher when we factor in food and crude. crude this week may actually go up again. And what we found is that if we take a look at global demand for crude, we're sitting at about 103 million barrels. But factoring in Russia, we are roughly 5% on the higher end estimated short of meeting that global demand, which means crude is under pressure to go up in terms of dollars, only because simple demand won't be met. So you can expect crude prices to continue to go up. And again, I've been talking about crude for some time. Actually, I've been talking about crude since November, saying that you can expect crude to continue to go up. And in fact, not just crude, but we could take a look at all food-related commodities, which I have spoken about again. So we have an energy crisis. We can look at crude, uranium. We can take a look at natural gas and oils. All of those are going to play an important role. But we're also going to have to look at things like corn, wheat, lumber. So although lumber is not a food-related commodity, it is still where inflation is hidden and not necessarily reported. So all these areas are absolutely crucial. Now, if we take a look at commodities, we are still entering another round of the super cycle. So we are getting ready to ramp up again. And although many commodities have already gone parabolic, we can anticipate that this is going to continue for the trend, at least for the foreseeable future. So I anticipate well into the summertime, commodities will continue to grow quite aggressively. I don't know if they'll necessarily double within a matter of weeks. However, we can anticipate that especially food-related and energy will continue to increase over the next several months. Now, I'm trying to keep this video really short, but let's have a look at crypto. I haven't really touched on crypto, and I do want to go back and talk about precious metals. But crypto right now seems to be in a little bit of a funk. So although, especially for considering Bitcoin, there is that slow creep to the upside overall. However, we're still maintaining a relatively tight channel, roughly between 38.5, increasing to about 42.5. And that's been the channel that it's been in. Now, currently we're sitting on the high 41K. So I wouldn't be surprised if we do get close to that upper side of the channel. But I'm really not seeing a heck of a lot of momentum to the upside to really get it to move with the volatility that we've become so accustomed to with crypto. Now, that doesn't mean, again, that it doesn't have that potential. It just means there's nothing out there right now in this immediate moment that is giving me the confidence to say, well, maybe crypto might move aggressively to the upside at this point. Now, if we breach this upper line, yes, absolutely, it could move a little bit higher, but we tend to see a pullback shortly after that breach. But let's talk about gold and silver, speaking of crossing important lines. Both gold and silver have been a little bit on the retreat ever since the Fed announcement. So gold is currently sitting, I believe, in the mid-19s, and silver is sitting in the low 25s. Now I'll just double check that here. So yeah, that's right. So gold is currently sitting at 19.21, and silver is currently sitting at 25 cents. Now, it's very important to note that if we consider the charts here, gold and silver have both breached very important lines, and we can see it move very aggressively to the upside. Now, during this week, I will be posting charts to take a look at a number of different commodities, including precious metals, because it's very important that we assess where the markets are going to be going in the near future. And in my opinion, as I've mentioned several times, the cycle is going to leave general equities and move into commodities and precious metals, especially industrials, as I've mentioned, food, and crude. But that's it, everybody. For now, I went way longer than I thought. I was hoping to only get this done in 5 minutes. But if you like what I have to say, please subscribe, like, and I'll see you during the week this time as we explore a number of different charts and a number of different commodities. That's it, everybody. See you at the opening bell.